got some pretty big shoes to fill, but I'm very excited. I've just been having a great chat with James Fuller, the co-founder and CEO of Henry, which just sounds the most incredible product. There's so many things I didn't even know that you actually did, Henry. So I'm really looking forward to sharing the session with you today to find out a lot myself. Would you like to introduce yourself and tell us a little bit about Henry before we get started?
Yeah, sure. So, hi everyone. I'm James Fuller. We founded Henry, probably about 5 years ago now. Henry is actually New Zealand's largest accountancy. We help sole traders of all types manage all of their tax payments, their financial admin, so that they can focus on doing the job they enjoy doing without having to worry about all of the stress and anxiety of tax and compliance.
Oh, that's amazing. Thank you, James. Now, before we get going, I'm actually going to give James a little bit of a shout out because I was very impressed at his email signature with all of the awards that you've actually won. So we've got the Ernst & Young Entrepreneur of the Year 2021 finalist, the FinTech Awards winner 2022, the Wellington Gold Awards and the NZ High Tech Awards 2022. And you mentioned to me that one of your sectors that you work in have actually nominated you for, was it a service award, which is coming up this week?
So Thursday this week, we are up for, I think, Service Provider of the Year at the Recruitment Industry Awards up in Auckland. So yeah, it's very exciting for us.
Oh, congratulations and good luck with that. It's great to hear that your customers that you're working with actually recognise and acknowledge the great work that you're doing. So I'll hand it over to you, James, for you to share a little bit more with our people that are online today to find out more about what you do.
Fantastic. Thanks for that warm welcome, Diana. Let me just share my screen here. Now, I promise I'm not going to bore everyone with PowerPoint slides for the next little while. I do have these slides mostly as pointers for myself. And so what we tend to do in these sessions is I've got a few things to run through that hopefully are going to help all of you understand a bit more about how to conquer your tax and financial admin, what your responsibilities are as a sole trader, what are sort of some of the things that you may or may not know. And then we've left a bunch of time at the end for questions. So I was saying to Diana just now, I'm happy to answer any question at all. But if you hold those questions either till the end or pop them in the chat, Diana's going to curate those, and we've got enough time for Q&A at the end. So I'll just jump straight into it. And first of all, just following on from the brief intro there, just a little bit about myself. So I was a sole trader myself. I was a consultant for about 5 years or so, and myself and my co-founder were both in the same situation, that we were just blown away by the amount of admin and hassle that came from being a sole trader. We didn't enjoy tax, and I will say right now, I do not enjoy tax, regardless of what we do as a business. But we created a few spreadsheets to solve our own problem many years ago, and realized when other people asked us for those spreadsheets that actually we'd kind of solved a problem that a lot of people have, which is they want to go into business, they want to be a sole trader, but they don't want to have to think about tax. And so we developed Henry, and we launched a few years ago. And we are New Zealand's largest accountancy. We're a specialist service for sole traders. So we're specifically designed for contractors, freelancers, tradespeople, health and wellness professionals. You name it. If you're a sole trader, we support you. And that's all we do. We don't work for companies and trusts and partnerships. We're very much focused on being advocates for sole traders. And so just to run through what I'm going to talk through today, we're actually going to dispel some myths around sole trading. And so hopefully out of this session, what we'll learn is things like you should hold back 1/3 of your income for tax. That's a common myth. We'll talk about that one. Independent earners have to register a company. That is also a common myth. You don't have to register a company to be a sole trader. We'll also talk a bit about business expenses and one of those common myths around, do expenses get refunded by IRD at the end of the year? There's also a common myth around KiwiSaver benefits and mortgages and loans. And so we're going to cover all of these things and really talk about how you can get access to these things as a sole trader in a way that means you can focus in on your business. And then I will inevitably probably do a shameless plug for Henry towards the end about what we do. But I promise this is not a sales presentation. This is very much educational. We like to help educate people as much as possible about how to be a sole trader. And should you decide that Henry's for you, we'd love to talk to you. But that's not the purpose of this presentation. This is about helping people understand more about what sole trading is about and what some of your responsibilities are. Okay, so let's first jump into one of the most important parts of being a sole trader, which is staying on top of your tax payments. And so just to start off with, we always advise people to know what their tax rate is. So to find out your tax rate, you would take an estimate of how much you think you're going to earn for the year and what you think your expenses are. And you'll be able to work out using some of IRD's calculators or a PAYE calculator, even if that suits you, you'll be able to work out roughly what your tax rate is. And that should be the amount you should be paying in income taxes. If you are using an accountant like Henry, or you're using a more traditional accountant, your accountant at any one time should be able to tell you what your tax rate currently is based on your income and expenditure. And we always say to people, you should be able to go to your accounting professional and ask them, so far this year, what should my tax rate be? And they should be able to give you that information. If they're not able to, you may want to try and find a new accountant, but part of their role is being able to help you understand how much money you might want to be setting aside, or you might want to be paying through to make sure you're on top of your tax commitments. So knowing what payments you'll have to make is also very important. When you're a sole trader or a company or however you operate, it isn't just income tax that you need to think about. You might be earning over a certain threshold and might need to register for GST, which is an entirely separate tax from income tax. You'll probably be liable for ACC payments. You may be liable for student loan payments. And so we always encourage people to become aware of what taxes you'll actually need to pay. Because similar to if you had a salary job somewhere, there are a number of different deductions that need to be made to make sure that you're on top of things. And so it's really important that if you are earning independently, you are a sole trader, that you're aware of what payments you might have to make. And just if anyone's interested, there are lots of good resources online about this. I know MB have some good resources around what taxes you might be liable for. Our website has a bunch of free resources that you might want to look at that explain all of this in detail in terms of what you might need to be paying. But before you start, or in the early stages of being a sole trader, just knowing what those key payment dates are, how often you're going to need to pay taxes, and what types of taxes you should be paying is just really important to give you the confidence that you're setting off on the right foot. One of the most often asked questions that our team have is, what if you're earning as a sole trader alongside a salary job? And so, a lot of people will say, well, I'm a sole trader, but I have a salary job. What does that mean for my tax rate? And the best way to think about it is, for your income tax rate, IRD will tax you based on the total of all of your sources of income. So that's your salary job plus any sole trader income on top of that. And so if you're trying to work out what your tax rate might be, don't forget to include any salary income you have when you're estimating how much you're going to earn for the year. It goes without saying, set aside money whenever you get paid, whether that's using a service like Henry to automatically pay your tax straight away every time you get paid, or whether you're putting money into an account and promising not to touch it. I always talk about myself being the poster child for making tax mistakes. Don't be like me and put money aside into an account. And then when a new iPhone comes out, you go, oh, I'll just dip into that tax money and I'll just buy this iPhone and then I'll make sure I pay the money back to that account. I think anyone who's been in that situation will know that, you never end up paying that money back. So if you're not paying the tax straight away, make sure you put it aside, make sure you don't touch it, because you don't want to get behind on taxes. It's really, really important to stay on top of things. And it's not hard to do if you keep to that habit, but don't think about kind of dipping into that. We always talk about making payments at the right time as well. Sometimes it would actually suit you to get that money away, get it out of your account and pay it as soon as it's due, rather than waiting, because sometimes things come up in our personal lives where it can be tempting to dip into the money that you've put aside for tax. Traditionally, and we talked about it earlier in the kind of myths that we're going to bust today, that there'd been like a bit of a mantra from traditional accountants that you should put aside 1/3 of your income for tax. And when I was a sole trader, that to me was quite frustrating, because I knew that wasn't my tax rate. I knew that 33% was not my tax rate. And I used to say to my then accountant, hey, what is my actual tax rate? And he was one of these accountants that couldn't tell me what it was. But 33% invariably for a lot of people is very, very high to be putting away. Putting away 1/3 of your income is it's too broad brush for most people. So getting an accurate figure of what you should be putting away or how much you should be paying is really important, because when you're a sole trader, you will have your own personal life, your own personal costs. And I always felt that I was effectively putting away across the course of a year. I might have put away as much as could have paid for a family road trip for myself and the kids. And I think it's really important not to put away too much money, but to make sure you're putting away just the right amount. Okay, so now we'll talk a little bit about business structure and insurance. And so when we always get asked, when should you register a company? And again, I'm going to give MB a big shout out here. MB has a fantastic online tool called the MB Business Selector. And I wonder whether one of the team might be able to just pop that in the chat if they can find a link to it. It's a really useful online tool where you answer a few questions and it will give you an indication of whether you should be a sole trader or whether you should be a company. But the general rule of thumb is, if you're a sole trader and you are earning income independently, you do not need to register a company. You can get an NZBN in the same way as you could with a company. You can issue invoices, you can raise expenses. The real reason to raise a company is one of a few things. If you are going to be employing full-time staff, if you are going to be managing complex inventory and taking on creditors, if you're going to take large loans or thinking about having someone invest in your business, then having a company structure is a sensible way to go. But one of the common misconceptions is that you have to register a company, and you really don't. We had a recent poll that we run called the Henry Sole Trader Pulse, and so many sole traders have considered registering a company for all of the wrong reasons. So 2 of those reasons is about thinking that you don't have to pay as much tax, and thinking that you don't have to be liable for the debts of the business. So a lot of people will say, if I have a company, I can't get caught out when people are chasing down debts of the business. And that really assumes 2 things. Number one, it assumes that you're going to rack up huge debts as a business and things aren't going to go well, which is very, very rare. But also there have been a number of sort of Supreme Court cases over the last little while where company directors have been found personally liable for the debts of a company. So it's really important to understand what your risk is as a business and get the right protection. And what we find is a lot of people don't need to register a company, but they do want to go and get what's called professional indemnity and public liability insurance. And this is effectively a form of insurance that you can buy that will cover you if anyone tries to lay a claim against your business, which might be about negligence, or it might be about sort of injury to members of the public, for instance. And so if you're a company, a lot of people get this anyway, but we would recommend that sole traders always look at their business and understand whether or not it's right for them to get a professional indemnity and public liability policy. Usually they're a few $100s a year, and they could cover you for a couple of $1 million of professional indemnity or public liability claims. So be aware about what sorts of insurances you might need. But actually registering a company does not mean that you can go and bankrupt a company and get off scot-free. It just doesn't happen. It's a bit of a misnomer. So if you're going to register a company, make sure it's for the right reasons, which is because you need that business structure, because anytime you do register a company, it is almost double the admin. You're going to have to file company tax returns. There's a lot more complexity and there's a lot more cost associated with it. So make sure when you're registering a company, you register for the right reasons. And potentially you can start off as a sole trader and then graduate through to a company. And we have many of our current and former users who've got that in mind, which is actually over a period of time, once they've built up their sole trader business, when they come to the stage that they might want to take on loans or investment or take on permanent staff, then they transition to a company structure. And it's much easier to do it that way than it is to start off as a company and then try and unwind it halfway through because you realize it's too complex. Okay, so what insurances do you need? So it's a really good question that we get asked quite a lot, and we've spoken a little about professional indemnity and public liability insurance. But you may want to look at things like income protection insurance. Obviously, as a sole trader, you're not getting paid sick pay or holiday pay. And so alongside what ACC does for you, which is to provide a level of cover for accidents and injuries and some sort of income cover, you may want to supplement that with your own level of cover, which might help you if you do find yourself long-term sick. So again, you have ACC by default as a sole trader. You'd be paying for ACC cover, but you may want to look at additional cover on top of that if you would like that sort of level of comfort if anything happens. So again, if you require that, we would recommend going to a mortgage broker, an insurance broker, and finding out a bit more about the different policies that you might be getting access to. There's a wealth of information out there, but it really pays to educate yourself as to what insurances you might need and make the right choice for you based on the risk of your business. And when we say risk, it's things like how risky an industry do you work in? If you're a sole trader brain surgeon, you might find that's a little higher risk than someone who is an administrative assistant. And it's about understanding what the risks are and getting the right insurance in place if required. And it's really a choice for you, and educating yourself is a really good step. Okay, so let's talk about the fun stuff, which is getting the maximum value of your purchases. And that means, what can you claim as a business expense when you're a sole trader? So it goes without saying, if you are earning independently, if you're earning a form of income outside of salaried employment, so if you're working as a sole trader, there are a variety of things that you can claim as legitimate business expenses. So things that you are buying in the course of running your business that you will be able to get tax relief on. So let's talk through what that actually means. So the best way to think about it is expenses reduce the amount of your income that you will pay tax on. So in the course of a year, if you earned $50,000 in total and you had $10,000 worth of expenses, you would pay tax on the difference between the two. So your tax rate would be set based on $40,000. And this is one of those myths we talked about earlier. Inland Revenue do not refund you for your expenses at the end of the year. The government is not paying you full price for anything you buy. So if I go out and buy myself something very expensive, like a laptop, for instance, I'm not getting the full value of that back from the government in tax relief. What I'm getting is that expense is going to reduce the amount of my total income that I get charged tax on. So we find a lot of people try and buy expensive things and put them through their business, and they say things like, well, I'll just get that back in a tax return, or I'll just get that money back later. You do not get that money back. You'll just get your income tax your rate will reduce based on you having had those expenses. So we always like people to be kind of well educated to what that means, because whilst you might be able to claim a proportion of the toilet paper that you buy for your house as part of your home office, you may find the time it takes to try and claim that expense is costing you more in your own time than it is to actually get the tax relief on a $10 pack of toilet rolls. So always be aware of what you can and what you can't claim as a business expense. So, and again, we have a bunch of free resources on our website for this, and part of the role we play for our customers is we help them understand what they can and can't claim. We review all of their expenses and let them know whether it's claimable. But there are a lot of misconceptions out there. We've had people say to us, I need to eat to live, and therefore I should be able to claim my food as a business expense. And that's just not the case. We had a taxi driver once said to us that he needed to claim his teeth whitening as a business expense because it was all about repeat business and service with a smile. And he knew deep down that it was not actually a legitimate business expense. And so it's really important that everyone who's a sole trader understands what they can and can't claim. There has to be a legitimate business purpose And there are lots of intricacies around things like clothing, entertainment. And so if you are going to kind of go it alone without accounting professional support, do make sure you educate yourself. If you're using the likes of Henry, our team will work with you and let you know what you can and can't claim. But it's actually very beneficial to know what you can claim and how often you can claim those things, because, you know, where there are legitimate business expenses, it will actually reduce the amount of tax that you pay. So it's very important that you do that regularly and take full advantage of when you have incurred legitimate expenses, that you do make sure that you raise those and you do claim those as part of a tax return process. So what to expect at the end of the tax year. So with a traditional accountant or kind of doing it yourself, around the end of the tax year, so at the start of April, so tax year ends on 31st of March, you'll be expected to file a tax return, an IR3 form with Inland Revenue. And that will be a summary of all of your income and expenditure for the previous year. You'll need to break down those expenses into the relevant categories. And the result of this will be a tax bill from IRD that you will be required to pay. Now, obviously, if you haven't put away any money during the year, Inland Revenue do offer payment plans that you can set up over time. Ideally, you will have the money set aside to pay, or you would have been using Henry and have been able to have all of that up to date. So literally, you have nothing to pay at the end of the year. But it's really important to get that year-end process covered for yourself. What you don't want to do is delay and stick your head in the sand. Because that's where IRD will come to you and say, hey, you need to file, we can now impose penalties. And we've seen horror stories of people coming to us with 3, 4, 5 years outstanding tax returns. And, you know, by the time you get that far down into that hole, it's very, very difficult to get back out. So starting on the right foot, staying compliant and up to date is really important. And knowing what the expectations of you are on the end of the tax year is also really important. So if you have a traditional accountant, as we say, they will probably come to you once a year and they'll say, can you provide all of your receipts? Can you put everything together? If you're using accounting software, such as Henry's software, you've probably been putting these expense receipts in on a regular basis. And so the ideal is that you're doing this often, rather than waiting till the end of the tax year and, you know, trying to find all of those receipts from throughout the year, because IRD do require you to maintain those receipts and to have those on hand, because if they have any questions about your tax return, they will ask to see those receipts, and either digital or physical copies of receipts are going to be required in order for you to be able to claim those expenses and get the tax relief. Okay, saving for retirement. This is a really hot topic for sole traders. And again, there are a lot of misconceptions here. So knowing what you're going to get from your superannuation from your KiwiSaver is really, really important. A lot of sole traders don't think that they can pay into a KiwiSaver, and that's absolutely not the case. You can make voluntary contributions into your KiwiSaver at any time of the year, and it's really important that you take an active interest in saving for your retirement, developing regular habits of putting money away, setting money aside and paying into a KiwiSaver fund or a savings account. Because it's very important that sole traders plan ahead. A little bit sort of unlike when you have a salaried job where your employer might contribute towards your KiwiSaver, sole traders don't get that benefit. So it's really important that you take it upon yourself to regularly pay into your KiwiSaver and to make sure that you are knowing what you're going to get out of it. Take an active interest in what is in your KiwiSaver and what that might look like come retirement. A lot of that is about what we would talk about being good financial habits. So that's making sure that you put money aside for your KiwiSaver, for your savings every time you get paid. If you went and spoke to a financial advisor, they would say, put away a percentage of your income every time you get a payment so that you can make sure you have enough aside for KiwiSaver or savings. Again, if you're using Henry, you can do this automatically using our allocations feature. You can set up percentages, set financial plans and goals, and literally every time you get paid, automatically pay into your KiwiSaver. And it's really important to build those financial habits so that they don't get away from you, because it's much easier to just build up that rhythm of doing it than it is to maybe get a year down the line and then try and make a lump sum payment to your KiwiSaver. So those regular financial habits are just really important, and it doesn't take much to do. It's an automatic payment or an allocation in Henry, and it's really, really valuable to make sure that you don't even think about that money. That's 3% of your income that you put into KiwiSaver that you know is saving for your retirement or saving for a rainy day. There is also a benefit to contributing to your KiwiSaver in that if you contribute a certain amount by, I believe it's early July, so you may still have some time to do it if you haven't, then if you contribute a certain amount, and I believe it's around $1,000, the government will match that contribution. So it is free money from the government. If you've paid enough into your KiwiSaver ahead of that time, the government will match your contribution. It used to be called the member tax credit. And it's really important that everyone takes advantage of that because it's effectively free money. You put into your KiwiSaver, the government will match your contribution. So if I think you have a few days left to do it. If you haven't paid as much into your KiwiSaver, do have a look at making a lump sum payment. You can do it all in one and actually get access to free money from the government. Really, really important that everyone knows that. That is one of the primary things for sole traders that often gets forgotten. Okay, so I said it earlier, I'm going to do a shameless plug for Henry, but I've sort of talked a little bit about it, but I just wanted to run through what Henry does for sole traders. So every customer of ours gets their own unique bank account to get paid into, and anytime they earn self-employed income, we automatically calculate, deduct, and pay the exact right amount of all of your taxes. So that is your income tax, your GST, your ACC, your student loan, if applicable. We do that all automatically for you every time you get paid. So that means you're always up to date, no nasty surprises at the end of tax year, and you can actually go into and out of sole trading income as many times as you like, and you're always up to date with IRD and ACC, so nothing to worry about there. We also file all your taxes for you. So our specialist accountants, we are the experts in sole trader tax. So our accounting team, whenever your tax returns are due, might be income tax, might be GST, we file those all for you. So you don't have to worry about doing any of the calculations or any of the payments. It all gets taken care of. You can raise your business expenses whenever you incur them. So if you go out and buy some materials, you just take a photo of the receipt with your phone in the Henry app, and our team will review that expense and make sure the right tax relief is applied. So again, that's making sure that you're not paying too much in tax. You're always paying exactly the right amount. And even working out home office deductions, asset depreciation, our service does all of that for you. So you just have to raise the expense and our team take care of the rest. We talked a little bit about it just now, but with our app, you can allocate money to savings and retirement accounts. So every time you get paid, you can pay into savings, you can pay into KiwiSaver, you can pay your mum, you can literally set up automatic payments to anybody you like every time you get paid. And that's just a free part of the service. It's all included. You don't have to worry about sort of nasty direct debits and getting caught out when there's no money. Is that you're only paying these allocations when you get paid by your clients. And lastly, we found that actually it's much easier for Henry customers to get access to things like mortgages and loans because the reports you can get out of the Henry app, you can walk straight into a bank and you can present them with the information. And because all of that money has come through your Henry bank account, the bank can have confidence that that's an accurate reflection of your income. So unlike accounting software where you can just kind of make stuff up and fudge transactions, you can't do that with Henry because the money comes through your Henry bank account. And so what that means is banks will look at you and say, brilliant, we've got a declaration from Henry about what your income is going to be for this year. They can confirm that you have no current tax debt, and therefore it makes you far more reliable from a loan and mortgage perspective. So we find a lot of people who have maybe had trouble with getting mortgage or financing as a sole trader often find that once they're with Henry and they're regularly up to date with their taxes, it becomes less of an issue for banks, which I think at the moment is all the more important when people are looking at the opportunity of maybe getting some financing in the future. So that's all I really wanted to cover from my side. I would love to kind of answer any questions that you guys might have. Maybe I'll throw it back to Diana and see if we've got any that have come through the chat there. But genuinely, if anyone has any questions about being a sole trader, even after this conversation, do jump on our website, henry.co.nz, hnry.co.nz. You can jump on the live chat there. Our team will chat to you, no obligations, it is no cost. If you have questions, just come and ask a question of the team. We've got a wealth of resources on our website for free. You don't have to be a Henry customer to come and chat to our team. We just really enjoy helping people and helping people understand the benefits of being a sole trader. So hopefully that's been useful for you.
Thank you so much, James. That was it was amazing. I learned so much myself, actually. And there are some questions that have come through in the chat. One of those, which, and just thought I'd mention, I threw in the chat for anyone that's joined us today, the tax resources, that are on Henry's website. So jump on there. Those I've had a look through myself. They're really, really helpful. And I've also put into the chat the business tools and resources from MB, which is another area that James spoke about. And that's a phenomenal resource that helps you with a lot of planning and setting up the structure of your business that you mentioned, James. And the other, I'll just jump onto a couple of questions that I've got here for you. And one is, do you help sole traders with business planning and preparation to having like a mid or long-term goal to help with financing for a bank? Because I do know that is an area with a lot of sole traders that they feel they need to be set up as a company for that purpose, to actually help them with managing their banking.
Yeah, it's an interesting one, because I think people sometimes believe that you need to be a company to have a business plan. And so we would say to people, actually, as a sole trader, you've still got a business. It is no less of a business. It's just not a company structure. It's a sole trader structure. And so when business planning, you can always speak to our team about some of the income forecasts or expenditure forecasts that we're predicting as part of our software, and include that as part of business planning. That says, when you're putting together your plan for a bank, perhaps, and you say, this is where I'm expected to be, you can reach out to our team and say, hey, I'm putting this together. I would like to know what you guys think I'm going to end up with at the end of the year in terms of my income level and expenditure level. And a lot of what our team are doing is actually, that's most of the help that they give our customers is how do we help them succeed in what they're doing. And so absolutely, if you have questions and you're putting together a business plan and you want some numbers to add in, beyond the reports that you can get out of Henry, do come and chat to our team, because they can always help.
Oh, thank you, James. I've got another really good question here, and that is, so you mentioned it's quite complex to reverse engineer your business setup. So if you're set up as a company, because that's potentially where you've been guided for whatever reason, but you actually recognize that you're actually more function as a sole trader, what would be the steps that you'd suggest they do to sort of reverse?
Yeah, it's a very common thing. So we do this ourselves. We actually have a whole expert services team that can do this for people, and so that's part of their role here. And our team in Wellington here, they're doing that quite a lot at the moment, where people have been guided to create a company, and then they go on that great MB Business Selector tool and maybe realize that company's not right for them. So we can do that for you. Again, that's just a part of the service that we can offer people on top. But the steps that you would go through, you have to file final returns, you have to submit kind of final information to IRD, you have to get confirmation from them. There is sort of a sequence of steps to effectively deregister a company. And they're all things that if you wanted to, if you had the inclination to, you could do yourself, or any kind of good accountant or a tax agent would be able to do that for you. So we do that quite a lot with our expert services team, particularly for people who've maybe have very recently set up a company and realize they don't need that structure. We can do that really quickly and easily, so that you can get back to just kind of focusing on your business and not have to worry too much about the additional admin of being a company.
And another question here, which I know there's a lot of people now, obviously with the change in work environments, that are actually contracting now rather than actually having sole, being an employee. Are you finding a lot of those people that are moving their working focus and how they're currently managing their roles? Does that sort of lend in towards the sole trading setup with a lot of your customers, do you find?
Yes, it does. I think in the last 2 years, we've seen huge amounts of people who've either through no choice of their own, through being unfortunately made redundant during COVID times, or through choice, have decided to pursue independent earning. And a lot of people are actually getting a lot of value out of that and saying, well, previously I sort of had all my eggs in one basket. I only ever worked for one employer. And so I was kind of beholden to that one employer for all of my income. And a lot of people have started to say, actually, I need to diversify. I need to take a bit more control about how I earn. And so what they're doing is they're starting to get into sole trading, and whether that's contracting or freelancing or whatever you want to call it, these are just people who are taking the opportunity to earn outside of either alongside or separate from salaried employment. So that's a lot of people that we support there are coming out into sole trading, into contracting for the very first time. And again, a lot of what our team does is about helping them go from being a salaried member of staff somewhere to being a sole trader, and providing that education is a big part of our service, and getting people comfortable with what their responsibilities are and where we will do things on your behalf, and where there are things that you can focus on, which is, growing your business and kind of working with your clients.
So tell me, if we had resources that have joined us today that are actually currently employed and are obviously on a salary or a wage and are looking at potentially becoming a sole trader, is it something that they could potentially dabble in starting to develop a business and operate as a sole trader alongside being a paid employee?
Yeah, yes, it is. And if and a lot of people are in the situation that they're not quite sure whether or not a sole trader business will be able to sustain a full income. And so what they do is absolutely, as you said, Diana, they will and a lot of people call it a side hustle. They will, alongside their salaried work, they will start to earn as an independent earner, as a sole trader. And I've got a great example of one of our earliest customers from down in Dunedin. Was a very talented photographer, but it was a hobby that they had on weekends. And alongside their salaried job, they just started picking up a little bit of wedding photography for friends, and just to cover their costs, they charged for it. So they joined Henry as a sole trader, and alongside their salary job, they started just earning a little bit of money here and there, and they absolutely loved it. They had such a talent for it that over a period of time, they realized that actually they could reduce some of their hours at their salary job and start maybe doing just 3-4 days a week, so that they could spend the rest of their week on their sole trader business. And eventually this customer got so confident and so had such a good client book that they actually then moved to the stage of saying, well, actually, I don't need to have a salary job. I can actually go full-time as a sole trader, as a freelance photographer. And so he spent a while building up his business using Henry with all of the online payment functionality. It was really useful for him to kind of to get himself off the ground. And after 2 or 3 years, he suddenly realized that he had enough business that he needed to hire some full-time staff. And so at that point, whilst it was sad for them that they weren't able to use the service, we gladly kind of graduated them, which is what we call where someone kind of goes from a sole trader to a company. And that's not for everybody. But they graduated into a company, and now very successfully have sort of employed staff and are doing very well as a full-time business owner. And, we always say to people, there shouldn't be any rush to go full-time sole trading. Just in the same way, there's no rush to start out with a company. Dabbling, doing some things at weekends. If you're selling products, go to markets, see what you can do evenings and weekends. That's how we started Henry. Claire and I, when we first founded the business, we worked our evenings and weekends on Henry. We everything we did was outside of our existing work, and we did that because there's no need to rush in. You don't have to dive in with both feet. You can literally say, okay, let me see how this works, and let me get comfortable before ramping it up over time.
Oh, thank you, James. I know that's a big area, and of course, we're currently experiencing, globally, the great resignation. And I know a lot of people are actually working out how they can actually pivot to actually get that work-life balance. And so all of that information you've shared there today, I think is really helpful for people that are listening in that space. Now, I know we're not meant to have a sell, but I definitely think there are some things which are really beneficial when I've looked through your product online. And one of the things is pricing, because of course, when if you are a sole trader and you're going to start to use and build your own little ecosystem of apps, it can be quite daunting, the amount of subscriptions that you end up taking on. Would you mind, I just noticed that you've got quite a different pricing model. Would you mind sort of sharing a little bit about that?
Yeah, sure. So I'll talk a bit about why. So we have a pay-as-you-go pricing model, and a little bit of that is that both Claire and I have both been in the situation where, you know, when you sign up for something and it's a subscription and they charge you every month, and then some months you don't use it. I'm thinking myself about that ill-fated gym membership I had where, you know, after a while I was just kind of literally donating money to the gym and never going. But neither of us like subscription models because we just didn't think it was fair. If you're not using it, you shouldn't be paying for it. And so our model is a percentage of income capped at a maximum each year. And so what that means is people are only paying for our service when they're using it. So our charge is a 1% flat percentage of income on any money that comes through your Henry bank account, capped at a maximum of $1,500 a year. So if you earn $150,000 or more, that would be a nice thing. Then yeah, you'll never pay more than that cap. But what that means is you're getting full access to the service. So that's all your taxes paid and filed. That's unlimited use of the app, unlimited use of the team, where the equivalent cost of all of those apps that you're talking about there, Diana, all the alternatives might be in the region of $3,000 to $4,000 a year once you add up everything that comes into it. And really, for us, the pricing is about being fair. It's about making sure that everyone gets access to good tools, to good compliance, to good tax payments and filings. And so everyone pays the same amount. It is one price. It's 1% for everyone, no hidden fees. And if you're not earning over Christmas, you can still use the service. You can still talk to the team because we just feel that's just a fair thing to do.
Oh, that's amazing. Thanks, James. I think we can all relate with the gym subscription model. I have one last question here. It's been such a great session, James. And I think this is a really good one is, you mentioned a few little tidbits like what I made a note of income insurance. So would you have like a checklist which you'd recommend to sole traders that, you know, some core things which are benefits of obviously being employed and then looking to move into that sole trader area, a checklist of things which they can sort of work through and plan what they need to build into their business model for themselves?
Oh, that's a great question. I probably don't have a full checklist. I think, you know, some of the things we've covered today, like making sure you're comfortable with how your tax payments are going to work, making sure you're planning for retirement, making sure you do think about those insurances. But I think one of the things that people often forget, and we could do a whole webinar on this as well, but it's about pricing your services, pricing your products. And it's a really important thing before you start to understand a couple of things, which is number one, what is the value of your own time? So if you think that if you put a price on your time for an hour of your time, say, how much do I think an hour of my time is worth? And then start to think about how much it's costing you to create your product or deliver your service, and start to think about it in those terms to try and understand how much you might want to price your services at. And that will also help you to better understand how much you might want to pay to have other people take care of things for you, which might be accountants like Henry. How much is that worth to me based on how much my time is worth? But a lot of people forget about how to price their services, and they get the excitement of, I want to go and sell these things and I want to go and take this to the world, but they maybe don't factor in how much it costs them to deliver that thing or produce that thing. And there's a fantastic, we have an article on our site, but there's a fantastic lady by the name of Natalie Coombe. And she does some great work in helping people understand how to price their services. So Natalie Coombe, Coombe, I believe. Look her up online, and she is a awesome human being, and works a lot with small business owners and independents to look at how you price your services, because your time is valuable and it's often overlooked by people. So if you were thinking about a checklist of things, do think about pricing alongside some of the more sort of transactional things like paying into savings and retirement, or potentially looking to put tax money away, those sorts of things, or get insurances. There's a lot of sort of sensible transactional stuff, but actually I think, you know, thinking about how you're going to grow your business and how you're going to price your business is probably one of the big things to start off with.
Oh, thank you, James. I've actually just found Natalie online and put her link in the chat there for you all. A great amount of knowledge shared, and especially in that sole trader space, but as because we do know a majority of New Zealand businesses are actually sole traders. So all the support that we can provide them is just fantastic. James, so thank you so much for that. Big shout out to henry.co, everybody. If you're looking to find out the taxing, how henry.co can actually support you with your tax management, I highly recommend jumping on their chat and finding out how you can get involved as well. Thank you, James, for joining us. I think that's a great topic that we have to talk to you about, is the pricing model, because I know from a lot of small businesses that we talk to, that's one of their biggest pain points is, okay, because quite often they have such an incredible value which they're offering, but they don't understand how to actually shape that into a monetary position. So getting some support around that, I think would be a wonderful session we must talk to you about, James. So thank you everyone for joining us on Facebook and LinkedIn and our other live channels this morning. We look forward to getting in touch with you, James, and getting more wisdom that we can share with small businesses moving forward. So I'll say goodbye to now, everybody, and have a wonderful Tuesday, and we look forward to connecting with you next week.
Thanks, everyone.